This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Good morning, good afternoon, good evening, whatever time of day you are listening to this very special episode. We're actually running this across Real Estate Business and our Smart Property Investment Show networks. I'm Grace Ormsby, and every now and then, while we get to talk to some of the biggest real estate agents and the investors that are doing some amazing things across the country too, we do like to take a bit of a deep dive, take a step back, take a look at what the data is telling us, what it actually means, and provide some really strong insight. And it's an absolute delight to be welcoming to today's show someone who is dealing with this kind of data every day and can actually give us some really concrete information and put us in good stead for what the future holds. It's an absolute pleasure to welcome Dr. Nicola Powell, the Domain Chief of Research and Economics. Nicola, thank you so much for your time today and welcome to the show.
Hello, Grace. Look, thanks for having me. It's a real pleasure to be back on this podcast.
Nicola, it has been a little while since we have had you across the network, but you've been doing some pretty amazing work over at Domain lately, and there's some new analysis coming out and a new report, which is all around what we can be learning from previous price cycles. And it does feel like we're finally coming up for air, beyond the last 2 years that have been the craziness of COVID. It feels like a really good time to be talking about this, given just how much has actually gone on in the last couple of years. What's it been like for you working in this data for as long as you have, but then just the past 2 years in general as well?
Look, the past 2 years have been probably the most insightful in my career. I have been solely focused on analysing demographic and property trends for a decade. And I feel like I'm going to be old and grey and still talking about that pandemic boom. It really was such a social and lifestyle shift for us all. I think, we all put our lives under the spotlight, and we obviously saw that impact on the real estate market. So, these are trends, that have been fascinating to watch, really dissecting what consumers were doing on Domain, where they were looking, that change in trends, the change in what we saw in the rental market. And as you say, I'm really looking forward to spring this year, because technically it's the first spring in 3 years that we haven't had, any impacts of COVID restrictions. So look, I'm quite pumped for this spring.
It's actually a good point to make that we're kind of heading into the most extended period of normality that we've seen for a while.
Yeah, look, and technically, we're still in the pandemic. COVID is still here. But I think, we're all a bit hardened to it now. And I think particularly for our real estate market, it was really interesting to watch the change in consumer behaviours as a result of lockdowns and, people bidding online, virtual inspections. And there's still an element of that that's here today. And it's really interesting the impacts that we've seen as a result of COVID. Some of them are here to stay. What we saw in terms of some of those trends, they were accelerated by COVID. We were already seeing people moving from our major capital cities, well, particularly Sydney, pre-COVID. But what we saw was an exodus. We saw a renaissance in our outer suburbia. We saw an exodus into those regional markets. And that is because Australians love a lifestyle, and Australians are really driven by lifestyle. And we really saw that bubble to the surface during the pandemic.
And we're talking all about property price cycles today, pretty much the core theme of the episode, Nicola. How much has the last 2 years, as much as, it seems to have been something that's so unprecedented, how much in your experience, in your expertise, has it followed a rule book of what you know about economics? Or has it been completely, unprecedented even in your experience as to how boom and bust work?
Yeah, look, it's been really interesting because, we did see a boom like no other. It was the steepest upswing across our combined capitals. It was slightly different depending upon the city in which you're in. So, for example, it wasn't the steepest in Melbourne on record, but largely speaking, this was an uplift Australia-wide. And I think the most surprising thing for me is that we saw all of our capital city markets synchronise. So they were all increasing in price for the first time since around that GFC. But I think what's interesting is, the upswing and this downturn that is now unravelling is performing as we would expect from historical standards. And what I mean by that is we're seeing greater weakness in our more expensive, bigger capital cities of Sydney and Melbourne. And we tend to see that historically. And also when you drill down to the smaller geographies, we're seeing the more premium end of those markets. So areas like the eastern suburbs, the inner west are seeing a pullback in price sooner, and they have seen deeper declines compared to some of those other areas.
So talking really around what can we be learning from previous price cycles, one of the most interesting points that I've pulled out from this report is basically the whole notion that upswings trump downturns in historical analysis. And that does feel like quite a generalization to make, but it's backed by the data.
Look, that is true. So we did this analysis looking at combined capital city house prices, and it spans almost 30 years, and we analysed the upswings and the downturns, and we even dived into individual capital cities, so Sydney, Melbourne and Brisbane, to see what the difference was. But that one line, an upswing does trump a downturn. We see that upswings tend to be longer. They also tend to be steeper. So what it means is we see greater rates of price increases than what we do compared to the downturn. When you average it out, so an average upswing sees house prices rise about 33% from the point of trough to peak based on the last 30 years. And it spans about 2 years and 9 months. Whereas a downturn has seen an average decline, wait for this, of only 3%. And that's from the point of price peak to trough. And it spans less than a year. It is. And I think this is the reason why we did this analysis. I mean, look, all price cycles are different. We can't, dodge that fact. And what we have seen is downturns have become greater in more recent years. So the 2017-19 downturn was the more substantial that we have seen. But generally speaking, when you look at that upswing compared to the downturn, you do see greater rates of price growth over a longer period of time compared to what we see in the downturn. And I think that is why we did this analysis, because it is a very unnerving time for people buying and selling property, for people who have investment properties when we go into a downturn. And I think, what we wanted to create was something that provided a little bit of reassurance for homeowners that, when you're faced with massive forecasts from others where they're predicting property prices to fall by more than 20%, we wanted to see and have a look at the data. Has this happened before in Australia? And the answer is no, it's not. It hasn't.
Some really reassuring sentiments there, Nicola. We're going to take a quick break. We'll see you on the other side to unpack more, because there is really so much to unpack with all of this.
Throughout 2022, we've already seen a huge ebb and flow in the Australian housing market. Property prices increased earlier in the year, but the rate hikes have slowed down price growth over the last few months. Even so, we've seen more new listings hitting the market than we've experienced in recent years. Plus, with many property owners having accrued a significant increase in equity, the market is hot for investors looking to snap up another property that may have reduced in price. To help you find these properties, the team at Pure Property Investment have done all the legwork to identify the top 30 suburbs that have not only shown growth throughout this year, but are also poised for strong capital growth over the next few years. Grab your free Top 30 Guide to Property Investment Guide today at www.purepropertyinvestment.com.
Welcome back to this very special crossover episode. I'm joined by Domain's Chief of Research and Economics, Dr. Nicola Powell. And Nicola, just before the break, we were talking about, I guess, the unprecedented nature of what we've seen due to the pandemic, but also the fact that it still fits in with normal, changes in market. And that's all it is. It's a very cyclical process, but really interesting that you brought up that those upswings are far larger and more prolonged than those downswings. And considering we're currently in that downturn, it's probably very reassuring news for a lot of people out there that it's not going to last forever. It's going to be quite short-lived by the sounds of things. And we're heading through to that spring selling period now. What are you actually expecting from the next few months? Do you think we're going to see any bigger declines coming through, or are we through the worst of it yet?
So I think, we're at the beginning really of the So I think we are anticipating that prices are going to continue to fall. And I think, we've got another piece that was released about Domain's buyer demand indicator. So what this looks at is buyers on Domain that are deemed as having a high intent to make a purchase. And we track that over time. And what we found is over winter 2022, it has been lower in terms of the level of high intent buyers on Domain compared to that 3-year winter average. What I would say, though, is we're comparing it to a very heightened period of time. And actually, in regional Australia, it was higher. And when you have a look over the combined capital cities, it's only marginally lower. It's not this dramatic decline in terms of what you would anticipate when you read some of the headlines out there in media. And I think as well, I think what we'll see this spring is much better purchasing conditions for buyers out there. I think buyers will be able to enter the spring 2022 market with time on their side. I think, conditions have slowed down, choice is increasing. And, I think for sellers out there, what we're starting to see is a bit of a stabilization of those clearance rates, which means that sellers are now starting to price their homes accurately to meet the market. And, I think it is about those A-grade homes as well. We're seeing A-grade homes sell quickly. But I think overall, conditions for purchasing this spring are going to present greater opportunities for buyers.
So, as you said, pretty exciting time this spring. It will be, again, to reiterate, be quite interesting considering it'll be the first one that, well, fingers are crossed, that there's no more lockdowns affecting any of that. And it'll be interesting to see how that plays out over the next couple of months. And one thing that I did want to bring up, Nicola, is around, the peaks and troughs in the market and how long that actually lasts for. And traditionally, we've always said, 7 to 10 years is the regular market cycle length of time. But given what we've seen over the last couple of years and how quickly that acceleration occurred from the previous downswing and the fact that we're now in that next downswing, does that still ring true that we should be expecting, markets to change every 7 to 10 years, or is that just ridiculous now?
So what we have seen is price cycles are occurring more frequently. When you have a look at the beginning of an upswing, so what year it started, we saw an upswing in 2011. We saw an upswing commence, or a new price cycle commence in 2015, a new price cycle commence in 2019, and then a new price cycle commence in 2020. That's pretty frequent in terms of price cycles. And that's a price cycle every 3 to 4 years, really. So they are occurring more frequently. I think, when you have a look at what's driving those price cycles, they are impacted by different things. When you have a look at the downturn of 2017 to 19, it was what's called a structural downturn. And that's because we had those changes in conditions from APRA that really did impact borrowing and specifically targeted investors. And that had a negative impact on demand in the market, and we saw prices fall. But I think, what we've got now is we are in a downturn, and it's different to the last one because we've got interest rates rising at the moment, strong levels of inflation really impacting borrowing capacity. But one of the points I really wanted to make today was, we're very focused on interest rates and the impacts of interest rates on our housing markets. But I think it's very important to remember that interest rates are not the only thing to impact our house price cycles. There are other things that influence things like tax settings, banking regulation, population and income growth, and also the responsiveness of new housing supply. These all have an impact on our price cycles and demand in the market. And, when you have a look at what's happening in the rental market, which we haven't touched on today, it's extraordinarily tight. And so I think astute investors out there will be certainly on the hunt this spring for the right investment property, particularly when you've got gross rental yields in some areas now improving because property prices are pulling back and we've seen strong rates of rental price growth.
I would love to get to some of that rental stuff just after the break. But before we do get there, those factors that you brought up, the tax settings, the population settings, all of those things seem to be things that we are actually talking about at the moment. They're all quite volatile. They're getting a lot of airplay, within the political, social environment. Do you see this sort of then being something that continues with us? Are we kind of resigned to the fact that with so much going on all the time that these cycles are just naturally going to be shorter, considering all those pressures that are out there as well. And why is it occurring so much more than it may have done in years gone by?
Yeah, look, I think we are likely to continue to see, and, maybe it's a bit of myth busting as well, myth busting the whole property price cycle being 7 to 8 years. I think we are likely to continue to see shorter price cycles. I think we do see the response of our housing market to different things. And as I said, the 2017-19 one was structural. Then we saw the upswing that had occurred being interrupted by the pandemic. That was an unforeseen circumstance cutting short a price cycle. And then we had the pandemic boom. And I think moving forward, you're absolutely right. Population growth is one of those things that is getting a lot of airtime. It's a political thing as well around, the return of overseas migration. And this is another thing that could bring another new wave of demand in our housing market because we have got overseas migration into a recovery. It's not back to where it was pre-pandemic. That is likely to occur FY24, is that full recovery. That is going to influence our housing market and particularly the rental market. And I think you've got governments as well talking about increasing skilled migration into Australia. That brings a certain type of person that expects a certain type of home and has a certain type of salary bracket, which will also influence the demand for housing in our major capital cities particularly.
We're going to take another break there, but stay tuned. We'll be back with more from Dr. Nicola Powell.
Have you considered adding Perth property to your portfolio? Momentum Wealth has experts on the ground to help you find the best opportunities in WA. They'll take care of everything from shortlisting and inspecting properties right through to negotiating the best deal on your behalf. And when it comes to managing your property, they have experts for that too. Contact their award-winning team today at momentumwealth.com.au and get your advantage in Perth's property market.
Welcome back to this very special episode. I'm joined by Domain's Chief of Research and Economics, Dr. Nicola Powell. Nicola, it's been so great to get a little bit of an insight into what goes on, I guess, day to day for you. You're dealing with this data on a very daily basis. And one thing I wouldn't mind raising just very quickly is around that rental behaviour. We touched on it very quickly in the last segment, but there's obviously always talk around what's going on with rents, supply issues, the rental crisis that we're seeing. From your perspective, can you just give us some top-level insight into what you're seeing going on at the moment?
So there is a rental crisis and some cities are in a worse position than others, but we have Australia-wide a landlord's market. Every single capital city and into those regional markets has a vacancy rate that deems it a landlord's market. So that means that tenants are operating in very tight rental conditions. And I think, this really needs to be addressed, at a government level, because I think, what we have seen is this rental crisis was occurring even during the pandemic where we didn't have overseas migration. There were certain areas, when you have a look at the vacancy rate in Melbourne CBD as an example, that vacancy rate peaked at just over 14%, which is an extraordinary high vacancy rate. But I think, we've got rising rents. I think for landlords, they would have seen an improvement in their gross rental yields. They would have seen an improvement in their asking rents. It is challenging for tenants. And I think, we do need more investment activity across our cities. When you have a look at some of the tighter capital cities, Adelaide has a vacancy rate sitting at 0.2%. That is extremely tight, and that is like trying to find a needle in a haystack if you are a new renter out there, newly into the rental market and trying to find a new lease.
I think it's one of those things where we're going to have to watch this space, aren't we? There's a lot of talk at the moment, and it's a conversation for another day, but around those tax settings, a lot of people that could be leaving both the ACT and the Queensland markets due to changing tax settings and also just changing guidelines around what deems an investment property to be habitable. And they're all things that are going to also be, extra challenges for these landlords or people that might be considering going into a property portfolio down the track. But we won't go too much into that today. But based on what we have talked around the rental crisis and then the fact that we're in that downturn, Nicola, I'd love to get your insight of where to from here. We've already touched on what spring will mean, and it does sound like quite favourable conditions for all parties involved. A little bit longer term, what are you expecting? And obviously this is a little bit of crystal ball gazing, and God forbid we have another pandemic that no one expects, something that does change the course of the market. But from an economics standpoint, where to from here?
So I think, we're likely to continue to see prices fall 2022 and into 2023. I think, when you have a look broadly at the economic picture, globally, we're starting to see some improved inflation figures in the US. Those improved inflation figures are still high. They're just not as high as what they were. So what that means is inflation is coming off of its peak, and that's because of improvement in supply chain issues and fuel prices. The reason I bring this up, this is a good sign for Australia and a good sign overall for where our inflation should be headed in terms of that improvement. And I think what we're likely to see is we're still going to see the RBA, I think, hike those interest rates. We're likely to see a period of time where they just sit and wait and see their impact of the higher interest rates on the overall behaviour of households. What we could see, and what we're seeing now in kind of predictions, is that we could see some interest rate cuts as early as late in 2023 and into 2024. I think there's a fine balance between now and then in terms of what happens to our economy. I think specifically for the property market, we are likely to continue to see prices fall this year and into 2023, whereas that new property cycle might begin, 2024. But when you get that far ahead, there are so many unknowns in those forecasts. But I think I'll go back to what we were talking about earlier. If we focus on this year, I think those opportunities are definitely there for buyers. And I think what we saw during the pandemic was a boom like no other. And it is a much better condition to buy in terms of those market conditions that we will see this spring, because, that urgency isn't there, and buying under urgent conditions isn't necessarily the best way to purchase property.
Nicola, you've given some great insight. I think you've put a lot of people's mind at ease on this episode as well. Thank you so much for your time. Really appreciate it. Already looking forward to seeing what's next. So we'll have to keep this conversation going down the track.
Thanks for having me on. It's been great to chat today.
To everyone who is listening along, we hope you have enjoyed this episode. Please like or review us on whatever platform that you do listen to your podcasts on. If you have any questions, don't hesitate to reach out. editor@realestatebusiness.com.au, editor@smartpropertyinvestment.com.au as well. Stay up to date with us on our websites as well as our social media channels, Facebook, Twitter, LinkedIn and Instagram. That is all we have time for today, unfortunately. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Would you like the latest news and insights in HR, leadership and people management? HR Leader has you covered. Subscribe at hrleader.com.au.